And we're back. Neal Isaacs, the Raleigh business broker, coming to you with more tips for small business owners, small business buyers, advisors of people in the small business transaction market. Today's topic, seller financing. I want to share some advantages of seller financing, but first I want to share my experience with seller financing. Owner financing, it's all the same thing. I remember when I sold my first business, and I was the person that I serve now. I was a business owner, felt a little stuck in my business, done it for a while, made money, had a team, just wanted to do something different. And a business buyer approached me and he said, "Neal, I want to buy your business." And I said, "That's great, because I'm ready to sell my business." And he said, "Here's the problem. I don't have the money." And I'm like, that is a problem. Like keys for cash. Like, that's how this works. And he's like, "Well, here's a solution." And I'm like, "Okay, what you got?" He said, "I'm going to give you half now, and then over the next few years, I'll pay you the other half." And I'm like, "I'd rather have all of it now. Like, what if you run it into the ground?" So I wasn't that comfortable with it, right? But I got comfortable with it. And we did a seller financing deal, and he paid me every penny that he said that he would pay me. And we got the deal done pretty quickly. And there was tax advantages, and I made some extra money on interest. I'll get into those a little bit later. But the main thing I want to share is my first impression was, no, I want all my money at closing. That's a lot of risk. If I don't get paid at closing, I may never get paid. This is the natural first impression of business owners when they hear about seller financing. And it's a natural, and it's true. There's more risk in owner financing, but there's risks in everything. Business ownership is risky. And I would say your business buyer's taking a big risk as well. You may not care about that, but they're one of the main reasons business owners will say, I want some owner financing, is they want to hear that you believe in the business, that you're willing to take some risk, that you believe that the business isn't dependent on you and it'll make money no matter who runs it, right? This is their perspective. But again, most owners are focused on, what does it mean for me? Let me break down what it does mean for a business owner. And I teased these earlier, but I want to come back to the main benefits of owner financing. Number one, for small deals, right? 100, 200, 300,000. SBA doesn't really make sense until you get up to like 300K plus. And then it goes up to 5 million. There's a way to do 7 million. But for really small businesses, a seller financing is a great solution, because SBA, it's like 10 grand to get into an SBA loan. You could probably get in shorter for less amount of money. But most business buyers just know that it costs them a lot of money to even start the process of SBA. So it can just not make sense financially for them to get into an SBA loan. Now, why do you care what it matters to them? Because everything that affects your buyer directly affects the business owner. It just affects their options for buying your business, and they're looking at other businesses outside of yours, right? That's super important. It's not a vacuum that they're buying their business in. If you're a business owner, they're probably talking to other business owners, and they may be offering seller financing, and they're going to avoid those fees. So think of it as a convenience option. But staying on that topic, a convenience option, when we do our opinions of value, we share cash offer, seller finance offer, SBA offer. The cash offer and the seller finance offer, we estimate they're going to take 6 months. We estimate an SBA deal to take 9 months, maybe a year. It's because SBA takes forever. And when deals go on a long time, people get fatigued. Deal fatigue is a real thing. And sometimes deals fall apart just because they're taking forever. SBA adds to that process. If you owner finance a business, you can close as soon as the lease is done, if there's a lease. If there's no lease, you can close as soon as the attorneys are done. One of the quickest deals we did was, I think, a laundromat. It was all cash, or maybe there's some seller financing in there. We just went to the landlord, and as soon as they accepted that, it was a done deal. Didn't have to wait for the bank. Conversely, we're doing an SBA loan right now. We just got the lease in. It took 2 months. It took 2 months to get the lease. So we did everything. We're in the middle of SBA, and the bank says we need the lease. We can't do anything without the lease. 2 months later, we got the lease. That's a problem even if you don't have seller SBA, but it's a complicating factor if you are doing SBA. You got to wait for the lease. So seller financing is, and by the way, you don't even have to have a lease to do seller financing, but I would strongly encourage it. Tip number 3, there are definitely tax advantages. There are definitely tax advantages to doing seller financing. I'm not an accountant, but here's what my accountant told me when I sold mine, and what other accountants have told my clients: you pay for the proceeds for the capital gains in the year that you receive them. So if you do half now and half over the next 3 years, you're paying capital gains on the half that you get the year you sell your business, and then a third. Well, that's not the right math. A third of the other half, a third of the other half for each year, right? That you're receiving it. So depends on what you're doing after you sell your business. If you're going to go and make a ton more money, maybe you want to take all the proceeds the year you sell your business. But most people are going to want to defer those taxes. I mentioned interest, and I've been talking about SBA a lot in this call because SBA interest rates are going up in general. If you are offering owner financing, seller financing, you are the bank. I talked about competition. If your business buyer is looking at an SBA loan, presently, as I record this video, people are looking at 10, 11% once the bank adds their markup to the prime. Seller notes, people used to do 3, 5, 6%. That goes up too. You are the bank. Your competition just went up with their rate. So you may be able to get more of a rate as the bank, as the seller financing bank that you are. So that's getting better. If you like to make more money, that's great. So interest, another reason. And then I mentioned the speed of sale. It goes a lot faster with seller financing. And if you are avoiding a bank, there's some other advantages that happen. And I love my banker friends, but when we do these deals with banks, the banks start to fight with the landlords, and there's this thing called lien subordination, like who gets everything when it all falls apart. It's pretty depressing stuff for the business buyer. You cut out a lot of that. There's no bank. It's really just a landlord. If there is a landlord, just less stakeholders in the deal. And that's one reason it goes a lot faster. There's less barriers to closing. So think about seller financing. Here's one more piece I want to put on there about seller financing. In regards to the risk, what's the collateral? That we always get this question. If they don't pay me, what do I get? Well, the way seller financing works, let's say you sell your business for $1 million and you finance 25%. You get $750,000 at closing, and you get $250,000 as a note. It's an IOU. It's a legally binding security that you can collect on. You can collateralize that. That just means you can stake it, right? You can put their house up. If they don't pay, you get their house. If they don't pay, you get the business back. I know a lot of people don't want their business back. If they don't pay, you can take the furniture and fixtures out of the business. If they die, you can get life insurance. So it's up to you how you collateralize it. It's something you want to talk to your intermediary about. That's usually their concern. It's back to risk. If I don't get it all, how do I protect the opportunity for me not getting paid? The worst case scenario is you may have to go to court. It's a legally binding document. Someone promises to pay you, and you have the paper, same way that the attorneys at the bank would do. You are the bank, so you may have to go into collections. Also, with the same way that banks do it, there's something called a UCC code. All that means is if you're seller financing, then the closing attorney will record that your borrower owes you this money on these assets. And when someone goes to buy those assets, then other attorneys will search and say, is there any liens on this? The UCC is the mechanism that attorneys use to search for that, Uniform Commercial Code. So it's out there. You got a note on this stuff, right? That's how this stuff works. So Lastly, about owner financing. When we have this conversation with owners, they are like me. They don't like it. They want all cash at closing. It's because they don't know who their buyer is. If you're going down this process and you're in the early stages, please know that in most of these deals, especially if a qualified intermediary is helping you through this path, that you're gonna package your business in confidential format, and then people will jump through hoops. And at the right stage, if they have money, if they have enough to get into the loan or get in majority of the deal so they can offer you a seller financing thing, you're going to start to get to know them. You're going to understand their station in life. You're going to understand why they're buying your business, what their net worth is, and just get to know them as a person. Why are they buying your business? What if they have a ton of money and it's tied up in something else? And that's why they want to sell it. They don't want to sell something to give it to you. You know, that you may feel more comfortable, not only when you understand their own personal balance sheet, but also when you meet them. What if they are better fit to run your business than you? You may be at a station in life where you're just kind of burnt out and you don't want to run your business anymore, but some young whippersnapper can step into your shoes. They have the experience and they just need what you started for them. They may be extremely qualified. You may just feel very confident that they're going to take what you've built, and the chances of them defaulting are very, very low. You don't know that when you first start this process, but you should have the opportunity to meet your business buyer, to have lots of conversations, and just get to know them as a person, as well as in a business relationship. Don't poo-poo seller financing. Think about it. Just be open to the idea. If you put out there that you're open to seller financing, more people will look at your business. You could command a higher price. I could go on and on and on about the benefits of seller financing. I hope I made you think about this opportunity today. My name is Neal Isaacs. I am the Raleigh business broker. I sell other people's businesses, and then I create content like this that are for people that are trying to navigate this crazy world of small business. It is different than real estate. There's a lot of parallels, but in the end, it's a people business. So the seller financing is a great example of that. Thanks for watching. Put your questions and comments below. If you have something specific to your deal, everything's confidential, so direct message me. But I look forward to bringing you more content in the future. Till next time, mahalo.